All right, cool. I believe we are live now. So welcome, everybody. Today is November 17th, 2025. My name is Spencer Riegle, and this is the Bookmap Trading series. So for those that don't know me, I am the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading. We hop on each week and we talk markets. And so predominantly what we talk about is Ethereum and Bitcoin markets. But we've also kind of been diving in based on popular request to some of the futures markets as well. So we've got the ES that we're going to cover today as well. But if you enjoy the stream, you can follow me at _RIEGLE, which is just my last name, or you can follow us at DARMA Cap Trading. We actually just started posting some more content last week, so very interested on people's thoughts there. If you enjoyed it, if it was helpful, if it wasn't, all of that's great. You can drop all those comments either engaging with it on Twitter or on X or just letting us know here in the Bookmap Discord. So, and lastly, I'm fairly active on LinkedIn, so feel free to reach out to me there, and I will respond as soon as I possibly can. So let's go through some disclosures first to kick everything off, and then we'll get into today's agenda. So all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So each week we start off, and I know I sound like a broken record, but we start off talking about risk capital. And why do we do that? The reason for that is, first and foremost, as a trader, your seat at the table is the most important thing you have. So losing that seat is a problem, right? And so we need to be very risk aware first before we are risk taking, right? And so why do we say only trade with risk capital? Risk capital is capital in which we see as capital you're willing to lose, right? And so if you need that capital at the end of the month for bills, you need it at the end of the week for groceries, or you just want to go to, let's say, movies, concerts, kind of go out and enjoy yourself on the weekends, and that's not capital in which we see as risk capital, right? And the reason for that is because psychologically it has an impact on your decision making, right? And so what we like to do each week is just focus on the facts. And so if you're thinking about kind of those groceries at the end of the week, those bills at the end of the month, or maybe that movie that you want to go see, you're not thinking about the trade, right? And so all of that has a cognitive bias and it influences us, right? And so our biggest kind of preaching point here is we want to stay in flow and just focus on the facts. So that's why we always start the week talking about risk capital. So I see some new faces, and so we're going to kind of talk about how we break it down. So we typically take a top-down approach to markets. And when I say that, we look very broadly, right? So what's kind of happening in the macro landscape, and then we go a little bit deeper in terms of the weekly landscape. And the reason we pick weekly is because we hop on once a week, right? And so 7 days from now, I will be back on at this same time talking markets again. And so that's kind of our very short-term duration that we talk on. And then we get to some strategy and application, right? And so beyond that, we go even deeper, and part of that strategy and application is we're looking at the micro level, which is Bookmap liquidity, right? And so all of that matters, and that's kind of how we approach markets. So on a macro level, let's kind of just take a step back. What's kind of going on, right? And so in Bitcoin and in Ethereum, markets have been selling off, right? And so I've started to get some texts about what's going on. Why is this the way it is, right? And so we've talked about it in the stream, and we started covering the bullish scenario for Ethereum back in July of this year, right? And so that price was just breaching over 2,200, I want to say, if not 2,500. And then we started talking about more of the risk scenarios after that bullish scenario is well known. Now that we've come off significantly, there are some major structural levels for us to talk about this week in terms of Ethereum markets, but also in Bitcoin markets. And then, but largely, right, we've seen selling for the better part of all of this quarter, but it started last quarter. And so there are some positive notes that I'd like to talk about that are specifically kind of front and center that I don't see being very widely talked about. But Ethereum specifically, we have Fusaka, which is going to launch December 3rd, 2025. That's a positive event for the ecosystem just generally, because that brings an upgrade to the ecosystem, right, in the protocol. So that all matters in terms of what the goal and the long-term goal is for Ethereum, right? The other kind of large aspects I'd like to kind of start touching on are, in terms of a macro bullish case, real-world assets coming onto chain in terms of Ethereum is powerful. And then the DATs, right? And DATs we've consistently talked about, but those still matter, and the accumulation of the underlying asset there, specifically what they're doing with it, right? Are they trading it, or are they kind of just reserving it? And reserving it matters for the respect that that brings supply off the market, right? And then immediately that's never coming back, right? And so that matters in terms of a supply and demand kind of mechanism, right? Beyond that, we have the Clarity Act, and this act passed the House, right? Back in, I want to say it was May of last year. Was it May? I have it up so that I could reference. It was June of this year, right? And so that kind of has been put on hold as the U.S. government has been shut down for quite some time, but it is now front and center again, right? And so that brings clarity to the space. It's also very important for institutional capital allocation, right? And so all of these kind of things, two kind of events front and center are Clarity Act, right? And then you have Fusaka for Ethereum. And then obviously you have your December rates for Bitcoin, which is kind of your more macro sense of what's going on in the markets, right? So on a macro scale, things are positive. However, on a here and now scale, things are not positive, right? And so that's kind of what's going to open up the door for us to talk about the weekly price outlook, right? And so when those two things converge, and we've talked about over the last few sessions, and I want to say last month particularly, 41.15 in Ethereum was a very important level because that was the previous year's close, right? And with previous year's high. And with such a positive macro outlook, one would expect that price would appreciate further than last year. And so the fact that the market didn't sustain those levels teed us up for some of this downside pressure. And negative price begets negative price, right, until it meets the floor. So that's where we are here now. And then let's take a dive into more of that microstructure, so that weekly outlook. Before we do that, this is our website, so I believe you can see this. Yeah, so each week we actually dive in and we talk about launch of our website that we did this year, but more specifically, we're talking about all the new things that we're adding to it. So we've added live charts, futures 4-hour delay charts. We just added Forex as well. We've added a market grid. All of our integrations are on here with all of the brokers that we support, that we integrate with, right? Which is super exciting for us. And then we have Academy. And then what I actually want to bring your attention to is last week we launched an Ethereum Q4 outlook. So if you haven't seen that, make sure to go check that out. It's both on our Twitter for one, and then for two is it's also on the website. It's free, so you can go check it out. That still stands true to this day. We are currently in this structural failure zone, right? And so under 30.95, which is what we traded today and we've held, that tees us up for some of these downside targets, right? And downside targets look a bit extreme, but in the hindsight of the market for the year, it's kind of just a one large range trade, right? So make sure, I'm not going to dive into all of it because we're actually just going to dive into the weekly, but this is the full Q4 that we just launched free, so everybody can go check it out. The last thing I want to talk about in terms of free, because everybody loves free, is if you head over to our sign up page, on the furthermost right side, we have a free trader assessment and education. So all of our education that we have listed on our website at this current time is free. So if you enjoyed any of the topics that we talked about today, sign up, right? Just, you got to enter some of your personal information, like an email and a name, and then you'll have access. And so from there, you can go over to the Academy and you can see a ton of different courses, right? So we have 3 right now, but within those 3, you'll see a ton of different modules, right? So I highly suggest going over there, at the very least, checking it out, and letting us know your thoughts. So there is that. And then the other piece was the trader assessment, and that's basically just a psychological test of who you are as a person and how that kind of correlates into your trading. So it's super interesting. At the very most, it's quite insightful to understand who you are as a person and then how that kind of translates into your trading. For me particularly, I do better in environments that have color on the walls. I know it sounds a bit crazy, but environment really matters. And so I learned that through this test, and that really helps me in terms of just my general happiness, which carries over into my work, right? So cool things that you can find there. So all right, let's dive into the weekly. So the assets that we're going to cover today, and if anybody wants to cover any more, drop it in the chat and we'll see how much we can tackle. But we're going to go over Ethereum, we're going to go over Bitcoin, and then we're going to go over the ES, right? So the S&P 500 futures. So let's start out with Bitcoin first, just the natural order, and then we'll go to Ethereum next. All right, cool. And one thing you'll note is daily, weekly, monthly. For those that don't or are new here, we support multiple different time frames. So we even support out to yearly, quarterly, and then you'll see obviously down here monthly, weekly, daily. And all of that kind of paints a larger picture for us, each of which tells us a piece of the story. And so how we break down markets is in sections, right? Just make it easy to digest, understand the state, what's the market state, right? And then we go into structure, strategy, and then we have a bit more, right? So specifically here, Bitcoin is in a bear trend, and I have not said that for quite some time. And I don't believe we've actually talked about one on the stream. So that's exciting. So a bear trend is a signature state. It's typified by a market that continues to make lower move lows and lower move highs, or negative structure. If the market continues to hold structure, further losses should be expected. This does not mean there cannot be corrective pullbacks, but rather any positive price action is expected to exhaust below the high inflection point that will maintain structure. Any violation of this resistance point or break in the negative structure is more likely to produce a neutral shift rather than a positive transition. If the market has been trading on the offer all session but has not been able to follow through on any negative breakout, beware of a corrective squeeze into the close. Typically, a strong price move at the end of the settlement phase will be followed by weakness in the new trade period. If the market is going to trend lower, it will demonstrate that with negative intraday price structure, if not a weak digestive trade is the outlook. So each week we start and we talk about the directional, right? What's the directional? It's a classic pivot. Over it in terms of price positive, under it in terms of price negative, right? Beyond that, we also talk about the R level. R level is a dynamic level that shifts each week, each duration, right? So dailies get a new R level every day, weeklies a new R level every 7 days, monthlies every month, quarterlies quarter, year, right? What does that tell us? That tells us where the power of the market is, right? And so the expectation on price over the directional is positive. However, we are looking for exhaustive signals because the sentiment is still negative. If price is under the directional, you both have a sentiment that's negative and you have a price that's negative. That's double negative. Now we're looking for negative price structure to hold. High here, fails down to the CR minus. Can't get over that high, continued failure, right? That's picture perfect what a bear trend does. And you can kind of see it here, notated in this graphic, just chopping its way lower, right? Let's talk about structure. So we kind of just alluded to that, but the structure bias is negative, right? So that's the R level is all the way up here, which it's above the directional. and is stationed at the UT1. A market in a bear trend signature state with the R level equal to the UT1 creates a resistance band which defines the upper peak of the negative market structure. Trading below the R level will keep the market vulnerable to a negative trend move. This is an optimal sell zone. Rallies into the area are expected to exhaust. Size management off lower selling opportunities should be considered to ensure enough buyer power is if an R level sell opportunity is presented. With the R level above the market, a worst case scenario is when the market breaks out to the downside, below the downside pivot, early in the session, and then has a low volatility rally all day, closing at or near the R level. Recognizing this momentum shift early can produce a nice counter trend opportunity. So what is that stating to us? Let's go into the strategy. So optimal strategies to look at this week: sell R fade, sell UP reversal. So if the market were to price over the directional, which it's not, what does that mean? We're looking for exhaustive signals, a price through the UP, and quick reversal under it, right? So a price trading of 104 that cannot hold on the session and trades right back under that 102.5 basically, and then quickly rejects. Where does that target? Immediately it targets the directional, if not lower, down to the DP, right? On the R level, right, which is a R level fade, that's where that was notating having enough sell power, bullets kind of in the chamber, so that you're not scrambling in, covering your shorts over the R level. Why? Because that's where we see the best risk reward this week, right? So a fade off of this figure, so previous month's close, perfect alignment at 109.5. So the expectation would be if the market were to continue higher into 109.5, then we would look to fade as long as 109.5 is not held, right? And you can see there's a bit of variance around that figure just because figures are static in themselves. The variance helps as price can be a bit dynamic. Because we are not in an optimal state or an optimal trade, we are in looking at the hedge themes, right? So currently we are in a sell directional breakout, right? Price moved and broke under here. Where does it target the DP? DP is a very important level this week, and especially over the next 24 hours. That stands at 89.25, basically. So a break under the DP that quickly reverses tees us up for the structural piece right here. When the market breaks out to the downside early in the session and then has a low volatility rally all day, closing at or near the R level. So a breakdown to the DP and a rally over 90 tees the market up for a potential squeeze right back. In a extreme scenario, right, we would end the week right back at the R level. Again, markets are heavy, offer is heavy, so a bit of context here really matters. And so a buy DP reversal, talked about, there is the hedge theme, and that basically is a theme that states that the market state is potentially in a problem. Why is that? Because any reversal on a bear trend or on any trend puts the trend at risk, right? Just simply put. And so down here kind of dictates what to do with that. So use a buy DP reversal and a buy directional breakout to capture a corrective turn. The buy directional breakout strategy can be used on its own to participate in a corrective rally up to the R level. Typically, the best opportunities are early in the session, which sets up a sell R fade. So because we are not over the directional, what are we looking for? We're looking for a compounded trade. So a break under the DP produces a DP breakout. Where does that target? Immediately that targets the DT1, if not DT2, right? Beyond that, if we get a quick reversal back, where does that target? 96. That immediately then potentially tees up for a directional breakout. So if you get a price over 96.75, basically, continues to hold over to 98, we're back in play for the R level, right? And so that's why it's a bit dynamic on what to look for throughout the rest of the week. Over the next 24 hours, market under the previous year's close is a market that's negative on the year. That's a problem. Fundamentally, that is just a problem, right? And so that becomes the most significant level to the top side. Under it, we're looking at the DP, 89.25. Currently, that's where this market's looking to trade, right? Where is it invalidated? If you can get a held price over 93,400, it's invalidated, right? You can lean off the shorts, not think about it as much, and look a bit higher. If we're holding heavy and we continue this trend, which we are, a retrace to the previous year's close that fails immediately targets the DP again, right? Or we just test the DP. So 89 and a quarter is that significant level on the downside. So that's kind of the outlook for the week. In terms of Bitcoin, let's pull up Bookmap over here, which I have, and let's see where that resting liquidity is and see if there's some alignment, which I would bet this week there's going to be. So 89, huge kind of resting liquidity. So direct alignment with that DP down there. And then 9,600, right? So right in this lower area here, we don't see a lot of alignment there. And so more alignment is with this resting liquidity band down here at 89 or 89. Top side, where are we seeing it? Previous year's close, which is 93,400. Nothing is resting there on the offer yet. Next is going to be your directional, right? So 96,800. We see it on the lower side of it. So just on basically just over today's highs. That's an important level to look at. And then top side. Let's see if we have any resting offers way up there. 105.5 we see up here, which is right in here. Not so much alignment there. So the biggest one that we see alignment is right at that 89, and then you have 85 on the downside with some resting liquidity. Not so much alignment there either. So 89 is the key figure that we're monitoring this week. All right, so that is Bitcoin. Let's take a look at Ethereum, and we can go through the same process. So we'll pull up the weekly. Zoom in a little bit here. And let's show some of those initial targets. So the R level there, and then we'll show the DT1 here. Okay, perfect. All right, so market state. Market's in a neutral digestion, right? So state is characterized by sideways trading conditions with limited profit potential. Opportunities exist on both sides of the market, but directional moves are not expected to be sustained. Avoid chasing momentum. Be patient and focus execution at key structure points, employing effective risk management strategies that protect any unrealized gains. Transition indicators, right? This state can be a precursor to a potential breakout as prolonged coiling action builds power. Look for any early structure as a tell to identify a possible breakout. A simple moving average can be an effective visual tool to identify an impending shift in state. If the shift in state is true, price action will maintain momentum into the settlement phase, which is the back half of the week, right? So where's the directional? 3,200. We're under it. Price is negative. Where's the R level? 37.71. We're under it. Sentiment's negative. So again, similarly to Bitcoin, all is pointing down. For neutral digestion, DP becomes a very important level, right? In a digestive trade, you shouldn't see a breakout. Breakouts we see to be DP to UP, right? That's our critical range. A breakout under it is a breakout trade. A breakout over it is a breakout trade, right? And so we shouldn't see a break under it in a significant way. If we do, that's a tell that the market is weak, right? And potentially is invalidating this state, right? And so in this current moment, we're leaning more on the transition indicators, looking at potential of break, right? Why? We're not there yet, and so we won't know until we get there, for one. And for two, we need to be assessing risk, right? And the market, in terms of sentiment, is negative. In terms of price is negative. And so there is a potential this level doesn't hold, and we are in a transition state. Structure. R level is equal to the UP, creates a range that is, or sorry, R level is equal to the UT1. This is actually, yeah, sorry, this is the wrong commentary. So, but basically it's the same commentary as Bitcoin previously, but I will read this instead. So, technically, the market is in a neutral digestive position with a negative bias. Opportunity exists on both sides of the market, but selling strength is the better opportunity. Either after an exhaustive reversal event with the UPR level, right? So UP up to the R level range, or fading momentum against the R level, right? R level up here. The underlying condition is neutral, so anticipate head fakes, but respect the negative bias below the R level. Right? Use a sell R fade and sell UP reversal in conjunction to capture the opportunity. So that would be if price was in an optimal state, which is over the directional. Currently, we are in a hedge theme, right? Market's breaking down, continues to break down, and we are looking to test the DP, right? And so here, particularly, that would set us up to a buy DP reversal. So price breaks, rallies back over essentially 2,900. That's our target, right? Where does that target? Directional, because that puts the state back into play, and that's what this looks like. So a break under the DP, targets right back to the UP, and inversely. It just becomes a very, very difficult trade to manage unless you're interacting at the extremes. So the hedge says don't get stubborn. However, if the market starts to build structure and goes into trend mode, a trend move to the downside may just be expanding its digestive parameters, producing a one-way trade into the close and new extreme. Use a buy DP reversal together with a sell directional critical CR breakout to capture the digestive stop and go nature of the market state. A rise above the directional after a test of the DP-CR minus range is a positive signal that targets the R level. So basically, that's currently what we're in. We're in that CR minus to DP range, right? If the market were to base here, or potentially produce a buy DP reversal, that immediately targets the R level, right? Does it get there? I don't know. But market needs to prove itself every step of the way in a buy DP reversal. And in order to do so, that means that the market breaks down to, let's say, 28.40, right? 28.20.30, and then immediately prices through here. Where's the first test? And we talk about tests kind of each week. It needs to validate over the CR minus, right? And specifically over this previous year's mid. So 30.60 needs to maintain to validate a buy DP reversal this week. If it cannot, that market is at risk of failing that buy DP reversal and targeting all the way down to the TT1, right? Don't get stubborn in terms of fighting this market on the buy side because we currently are in negative price structure, right? High here, low, lower high, lower low. There's no reason to fight this market yet. If the market were to hold here, it's starting to look interesting, right, to engage. However, price structure still matters. And so if we test this level, in order for that to validate, previous year's mid needs to hold, and that's 30.60. So if you see a price at 2,900 and you're looking to just buy it and close your eyes, that's not the trade. The trade is, okay, if it buys 2,900, it absolutely should not be trading 28.44, or you're wrong. Where does it need to go? It needs to go over 30.60, and it needs to hold. The moment it goes over 30.60, directional is in play, previous year's close is in play, and then UP, and then the R level, right? And you can think of them as a ladder, right? So every time it produces a new kind of validation on your test, move the sell stops up, move them up. Always lock in profits when the market's giving it to you, right? Don't just think that this level has to hold and it is the golden ticket. The market typically likes to give you opportunities and then take them away. And so in order to do that, in terms of being active on the trade, we always need to be moving it up and making sure we're locking in something along the way. So that's Ethereum, and that's the weekly outlook. So let's take a look on that liquidity and see if we see some matches there as well. So we have a lot of kind of bands down here looking to bid the market 2550 all the way down to 2200. So 2550 is more in alignment with this first target, and then 2200 is in alignment with the second target, if not lower than that second target. So absolutely there's alignment all throughout here for initial target 1, objective target, and then you also have previous year's low, which kind of defines this downside range. It would be a massive move on the week. However, markets have been trading incredibly volatile as of late, so always keep an eye out and treat these as tests. That's the best way to do it in my mind. Market needs to prove, and it needs to act perfect. The moment it's not, no need to size up, no need to fight it. Stay in flow, size back down, and wait for the market to produce a better signal. Right. So let's dive over to. Let's go over to the ES now, and we'll jump down here. All right, cool. So ES was pretty quiet on the day, actually. I was taking a look at it. But market state. Currently, we're in a bull trend digestion. Signature state has an underlying positive foundation, but the current expectation is for a sideways digestive trade. Typically, the market has made a sharp advance in the prior sessions and needs a sideways session or two to catch its breath before it can resume the bull trend. This is a difficult trade state with low volatility, one-way price movement common, as well as choppy false breakout signals at the extremes. This signature state can also be the precursor to a negative transition into a broader neutral market state. The tell for any shift is a break in positive structure. Any negative shift is more likely search for a new lower digestive extreme, so don't press any weakness. Instead, anticipate a bounce back into a digestive posture. Directional here is actually in alignment with the R level. What does that mean? Structure. Sentiment bias is neutral, right? So the R level equal to the directional signals an indecisive, difficult trade state. Expectation is for a sideways digestive trade rotating around the directional R level. If the market is going to go, it should build positive or negative structure above or below the directional R level and not look back, with confirmation of an extended move signaled at a breach of the UP and the DP. Critical range parameters. Typically, a market in the signature state either makes a move from the get-go or churns sideways for the balance of the session. Currently, broke out, we broke under. So far, negative price structure is holding. And then you have previous week's low down here that matters, right? So if the market has not been holding structure, then continue to fade price action in either direction. So the strategy for the week in the ES is this, right? Buy R fades, buy DP reversals, sell UP reversals, and sell R breakouts. Currently, we are in a sell R breakout, right? So sell R breakout is the market is breaking under the directional here and continues to hold negative price structure. So since this break here, highs here, lower highs, and then we are kind of just balancing around this lower area here. So technically the market is in a digestive bull trend with the current structure bias is ready to make a decision to resume the bull trend or produce a negative shift in state. The R level defines the point of equilibrium, and the buy R fade strategy is in alignment with the underlying positive state. If the bull trend is ready to resume, the integrity of the R level will remain intact and price action will maintain a trade above this level. The UP is the hurdle to confirm a new extension higher, and a buy UP breakout strategy can be used to add to any long position off the R level. As long as the price action is holding a positive price trend, maintain a cautious posture, as the digestive nature of the state can derail any momentum back into a stop and go trade, which is kind of what we've done so far. Use a sell UP reversal to capture a false UP breakout and drop back into a digestive trade down to the R level. A failure from the R level is a sign of weakness and should just go if the market is going to shift negative. The market has been digesting, and a sell R breakout will have some energy if the market is going to transition to a new state. Ride negative price structure, anticipating 2 APMD move. If after an R level failure, the market cannot hold negative price structure. So if we're back over the R level this week, cannot hold negative price structure, it is a sign that the digestive parameters of the state have been expanded, and a buy DP reversal is a good strategy to catch the updraft. Don't press it. The fact that the R level has been broken is a tell that the trade will stay digestive, with profits for the buy DP reversal likely limited to the directional R level. So what is this all telling us? Basically, for this market, currently we are in a sell R breakout, right? And so that is a hedge theme. Why is it hedge theme? Directly goes against the state, right? And the state is we're in a bull trend digestion. For a bull trend digestion, the market really should be above the R level, just digesting, right? And that just looks like choppy trade. But nonetheless, it should be above the R level. The fact that we broke the R level puts us in a sell R breakout. Where does that target? Immediately targets 2 APMDs, which is the DT1, right? It's a big move. However, that is the current outlook. Where does that become invalid and we go right back to the state? Just back to the R level, right? So if this market is to hold the CR minus, we trade right back over the R level. It just becomes digestive, sloppy. It's kind of a market not to really interact with, and really take a step back and wait for better signal and opportunities. So that's ES on the week. And then on the upside, right? Let's say that we do get some of this upside momentum. We take out this structural high here. Price holds. We continue to make positive structure. The UP is the level that really confirms re-engagement of the trend. Otherwise, we're just in a really large digestive trend. It's positive over the R level sentiment bias and the directional, but it really, in order to re-engage, it needs to pop over the UP. So that's kind of what we're looking at on ES, but I hope that helps. All right, let's open it up for questions. I know we kind of went through a lot, but if we have any questions, feel free to drop them in the Discord, and then we'll go through them. And then if you guys want to go over through any other assets, we can also do that too. We just rolled out Forex as well. So I know that Stephen, you were mentioning some of that this week, so made sure that we could get that up. Cool. Yeah, no problem. Yeah, so we'll leave it open for questions for about a minute. If there's no questions, then we'll wrap it up. And then I can actually talk about. I dropped a tweet that we did this week. So let's see if we can bring that up real quick. Yeah. So specifically here for those that don't follow us, feel free to, because we're just publishing some more content now. So we're really getting involved in terms of the content, which is exciting because we get to show some things and get some initial feedback on better ways to explain it and how we look at markets. So last week was an incredibly busy day in Ethereum. So we went through exactly kind of what we do on the weekly streams, and we broke it down. So where were the strategies at? And then, yeah, sorry, I was reading Steven's question. Steven, I will get to that in a second. So we broke it down into numbers, and then we basically aligned it here with what it is. So market was in a neutral digestion transition, right? Suggesting potential for a breakout session. The R level was at the directional, right? And so that means the market spent some time compressing, coiling, and it was ready. right? And so we got it, and price validates a buy hour breakout with the initial target being the UP, right? So right here was that buy hour breakout. We get the initial target attained, but immediately we price through and then we create a sell UP reversal. So if your buyer's here, you immediately need to be out here. And the reason for that is the market is telling you that the momentum is at the very least gone and price is not holding structure. So from that sell UP reversal, immediately we target the directional once again. And so price activates a sell UP reversal, invalidating the secondary price and the objective, which is the UT1 and the UT2. And then we switch over to an outlook where we're looking at the directional R level. So price attained the directional R level. Price triggers a sell R breakout. And then immediately initial targets become DP, DT1, and then DT2. And so cool part was we kind of showed it because it was a lot of volatility. So it shows how the price map, or how price moves through the price map, and how many opportunities can exist on a single day. So that was cool. And then we also broke down some ES as well, because I know there's been some ES. So a buy DP reversal on Friday that targets the directional. So that was cool to show. To Steven's question, he says, I have one question regarding the ETH. I was wondering if you trade the ETH with this strategy or perspective. The answer is yes. So all this stuff is what we're also using, right? And so that's kind of why we hop on and we talk about it. We also trade mandates. And so all this stuff in terms of the playbook is on the right side. This just gives trade insight and gives trades that are optimal and hedge theme that we see. And so absolutely we are monitoring that and watching that. We also monitor multiple different durations, which matters a lot too. But if we're trading a mandate, let's say that mandate is a call right program, right? So Steven, are you specifically asking, do we trade overnight as well? Yes. Okay. So to answer that question, yes, 24/7, 365. Absolutely. So in crypto markets never close. Price is the truth, right? And so if the price it's doing something, we have stuff to do. So it can be incredibly exhausting at times, but absolutely. And so kind of speaking back to the other question about trading in this perspective, all those kind of things, we also have mandates. And so, for instance, if you're trading a call mandate, a call writing program mandate, then you can cater the playbook, the price map to those strategies, right? And so when is the optimal time to sell calls? Well, I mean, if you kind of pull up sell calls at the UP, sell puts at the DP, right? We have an options portion as well. And we're actively rebuilding a lot of this options portion as well. So, we use different strategies and nuances within the price map to customize it to any mandate, any strategy that we are looking to deploy. So, okay. Another question is, where's the best time to start BTC perp futures trading? Is there resources within Bookmap? Absolutely, there's resources within Bookmap. I believe if you want to head over to Bookmap's Academy in the Discord, they have a ton of stuff. If you're interested in our stuff as well, I mean, we support what we just went over today was the Bitcoin perpetual contract. So if you're interested in those outlooks as well, we do all of our Academy for free. So you can go to the sign up page and just sign up and go through the full Academy, see if it's understood. Reach out to us with any questions, right? We have a chat bot down here that you can ask questions to us on, or you can do it here in the Bookmap Discord. All that works. We also support CME futures, right? So if you're, let's say you're in the US and you don't want to deal with external brokerages, we do support CME Bitcoin futures, ETH Bitcoin futures as well. So all right, cool. I think that's it on questions. So we'll wrap it up there. And then if anybody has any questions or they're watching the recording and have questions, make sure to stop by the Discord or reach out to us in any of the other venues, and then we'll get back to you as soon as we can. So thanks, guys. Enjoy the week, and then good luck.